Hi friends! So, in movies, traders are often portrayed like this: a stock exchange, chaos, everyone shouting, buy, sell, urgently need to dump assets. It seems to everyone that this is what a trader's job looks like. However, this is a very distorted picture of reality. Most of the time, a trader is engaged in market analysis. For example, calculating the expiration time. How to do it? This is the most difficult and most common question I received in private messages. So today, I will try to show you visually why it's not easy to answer it unequivocally with a ready-made formula. Alright, buckle up and let's begin. Alright, let's start trading. Right away, I see a great opportunity to enter the market and trade on the rise. As usual, let's start with the analysis of signals. First, the marker has exited the oversold zone, and secondly, the MACD lines are almost intersecting. The green crosses the signal red. Also, the alligator lines are starting to unfold, preparing to cross from bottom to top. Also, it's very important to understand that alligator is not such a sensitive indicator and reacts longer to market changes. And this is a good quality on higher time frames and with long expirations, but on a minute chart it lags slightly. Nevertheless, in combination with other indicators, it can be used to analyze the minute chart, and it gives an excellent understanding of the state of the trend. Alright, close the first deal. Let's observe this pair. There is still good potential for growth. Friends, do you want to unlock your potential? The potential for growth, income, and financial independence? I'm sure that's the case if you're watching this video. So I know guys who made decent capital in just a year. However, that seems more like an exception than the rule. And I'm not part of that exception either. It took me 3 long years to achieve stable earnings in financial markets. And back then I used to work as a simple manager, and I had to combine work with learning how to trade. So it was really hard, and I remember that very vividly. Therefore, to shorten this path, for those who are already taking their first steps in trading today, I conduct deposit boosting marathons on my Telegram channel. The link is in the description below. What it looks like? So in a closed club, I post signals for opening deals and explain the reasons for my decisions. Almost like in this video. You repeat and earn together with me and learn trading under my careful guidance. The marathons run from Monday to Friday at 6 p.m. every evening, and the result is an increase from $150 to $10,000 in your deposit. In my opinion, that's quite a decent amount, don't you think? So write to me in private messages if you think so too, and I will tell you all the conditions for participation. But for now, let's get back to trading. So friends, I've already made a video about expiration. Rewatch it if you haven't seen it. There I explain the essence of this phenomenon, but I was bombarded in private messages asking me to tell you how to calculate the expiration time. And the main question is, why do I do everything as written on the internet, but my deals close at a loss? The forecast was correct, but there wasn't enough time. Then I ask, where did you read it, and what exactly is written there? Typically the answer is, well, here it is, in all the descriptions of some indicator, it says to open a deal for 3 periods on such and such a signal. And friends, I think I'll increase the expiration time to 2 minutes, although in principle we can go back to 1 minute now. That should be enough, I think. And it's time to open another trade on the rise. There was a correction after the growth we earned in the last deal. In my opinion, the price will continue to rise as the crossing over the alligator lines has completed. And at the same time, the readings of other indicators have not changed. Even more, D marker is rising and preparing to enter the overbought zone at the 70 mark on the indicator. I wanted to increase the expiration time to 2 minutes, as there is always a correction of 1-2 candles after a phase of active growth. But the new red candle that opened instantly played back a significant part of the growth. Therefore, it no longer made sense to adjust for a long correction, and in my opinion, I returned to the usual 1 minute. So as we see, the decision was right. The deal closes with a profit on the balance. I'll increase the investment size all in and we'll continue the conversation. So in the description of each indicator, it is usually indicated that the expiration time, say the same 3 periods, should be set on a time frame of 5 minutes or higher, okay? There is often a footnote from the author of the article, not a financial recommendation, to absolve themselves of any legal liability. But who reads it, right? Such details are for weaklings when it comes to quick money. Alright, let's take a break. I want to increase the expiration time this time to 2 minutes. The volatility in this pair has decreased now, and the price is in a consolidation stage. Nevertheless, there is still potential for growth. So let's open another little deal on the rise and see. The marker crosses the boundary of the oversold zone, which is a good sign. But I have doubts that 1 minute will be enough to overcome the resistance level. Although there is already growth now, but predicting this was not so easy. Alright, let's observe and continue. Next, I ask beginners, what time frame do you trade on? It often turns out that the person trades on the minute. I ask why, if you are oriented towards a conservative strategy with long expiration. And it turns out that people watch bloggers on YouTube, including me, where everyone trades on a minute time frame. So people have a complete mess in their heads, a keen of trading Frankenstein, where everything is lumped together, signals from one strategy, expiration time calculated by another. Sometimes they also pick up a strategy from some video about covering unsuccessful deals, like it's okay if the deal closed at a loss. After all, you have clear signs from indicators and you are confident in them. Just open 3 more deals in the same direction and you'll cover the loss and even stay in profit. This approach has a right to exist when you have years of experience behind you, okay? But I strongly advise against doing this for beginners. Without understanding what you're doing, you'll turn trading into a betting game. And this ends with covering deals closing at a loss and your balance hitting zero. When you're just starting to trade, it's more important to understand the reason for the failure of each deal, rather than how much you earn. So deal closes, almost $60 on the balance. I'll increase the investment size and return to a minute expiration for now. I want to observe the chart to understand the further trend. I think now is a good time to open a deal. This time on the decrease, let's draw to identify market signals. So D marker left the oversold zone without really settling in it. The MACD histogram is speckled with red columns, indicating a potential reversal of the chart. The alligator lines are also starting to unfold. Next, the chart will either go sideways, which is more likely, or there will be a reversal. But volatility is decreasing, so I expect a decline within a minute and a flat afterwards. Okay, let's continue the conversation. So the reason for the reckless actions of beginners is simple. You watch videos with rapid account boosts where in 20 minutes the balance grows 1,000 times and you want the same. In other words, it's a simple belief in quick money with minimal effort. Unfortunately, that's not how it works. Okay, let's pause. The deal is closing. As I said, I expect a sideways trend next. So we'll finish with this pair and look for a new entry point. I'm opening an option for the rise of the exchange rate of the euro/dollar currency pair. The expiration time is now 1 minute. Let's figure out why I decided this. So the price was rising earlier and the chart reached the resistance level. The level is quite strong as the chart stalled on it several times from different sides. The candle broke through it, but then the price corrected. Meanwhile, D marker has not yet entered the overbought zone, so it still has potential for growth. But there might be a reversal also. And although we have a crossing of the alligator lines, and after that they confidently diverge, indicating the growing strength of buyers at this moment. So there might be a breakthrough of the level after the correction, but I think in a minute the price will at most rise to the level, and then there are possibilities. That's the case, and a reversal is looming in contradiction to the indicator signals, so for now, I'll finish with this pair. So I'm opening an option for a decrease. Let's analyze the reasons for this decision. Again, always look and analyze where the important levels are. In our case, the price has reached the resistance level. So the price has just approached the level after a long phase of very active growth. Next, we look at the instruments. And what do we see when encountering the level? Red columns of the MACD histogram are a harbinger of a potential reversal or at least a correction. D marker is still in the overbought zone, but if you pay attention, its curve is more aimed at exiting it. So I'm waiting for a correction. What's next? Several options, either a breakthrough of the second or third attempt, a reversal and fall, or just sideways movement. But what's important for us now is to determine the point where the chart will be in a minute. There is a result. I suggest we observe the chart for further analysis. Let's increase the expiration time. I'll set it to 2 minutes and open another trade for a decrease. We saw a phase of price consolidation near the level and a hint at its exit. So what are our options now in terms of choosing expiration time? I don't have a clear answer to this question. The only thing I'm sure of is that the price will go down. Either wait for the exit from the consolidation zone, but there is a risk that the chart will sharply go down to the next level and the moment will be missed. Or you can wait for a confident downward movement and try to trade with a minute expiration from strong signals, but I've described the risks, basically. Or increase the time, as I did now, predicting a price decrease. And here the question is more how you are used to trading personally. In any case, on a minute chart, there will be a lot of noise, and this is the main reason why beginners should not trade at such a pace, okay? But such trading is also attractive because it has created such an image of traders. If you ask someone who has never traded themselves how they imagine a trader's work, most likely they will describe a scene from a movie. The stock exchange, everyone bustling, shouting, selling something urgently because of some news, okay? But the thing is, movies painted a dynamic actor's image, but it's the image of a bad trader, okay? Because in real life, you sell something in a rush on the news if you miscalculated earlier. A normal experienced trader prepares for the news storm in advance to avoid fuss as much as possible. But such an image doesn't fit in the frame, because it's boring, right? The expiration time is excellently calculated. Let's reinvest all the profit and observe the chart. And why am I telling all this, you might ask? To understand why beginners rush into trading on a minute chart and can't cope with expiration. Okay, let's continue later. Let's open another deal for now. I'm trading for a decrease with a 1 minute expiration, as there was a correction just now, but nothing changed in the market, and in such a situation, it's logical to assume that the price will continue to fall. Here, a minute is quite enough to catch this movement, but let's get back to the discussion, okay? So, when making videos for YouTube, I also trade on the minute chart to have a dynamic picture. And let's be honest, you would hardly watch a video where one deal lasts 30 minutes. But the truth is, beginners should be making exactly such trades. You take it straight from the textbook. Look for an entry point with a time frame of 10 minutes or more. Wait for all the signals of your system, okay? Calculate the point where the movement you're catching will end, and calculate the time to close roughly in the middle of the chart's journey. But even this approach will not guarantee a 100% result. We will talk about this later. The deal closed, and I look for a new trading opportunity. So back to the euro and US dollar pair and open an option for a decrease. Let's go through the signal analysis. We have a resistance level to which the price sharply dropped, followed by a bounce on the correction. Here's the level. Like in previous deals, I predict that the correction will last no more than one candle, so I make such a forecast. The red columns of the MACD and the potential reversal of the alligator lines confirm my hypothesis. Let's observe and continue the conversation. So, even when trading on higher time frames, you won't get a guaranteed result. Why? Because you see numbers and want to translate everything into formulas and simple mathematical calculation. But behind the charts and numbers are people. Close the deal. Over $2,000 in the balance. Let's see what happens next. In general, I also often use the Keltner channel to determine potential chart targets. Let's add it to the chart now. And let's continue. So the market is people, other players, okay? There are hundreds of thousands of them, and they're analyzing something too. Some are waiting for a correction, while others think the level will be broken. I think it's time to open another deal for a decrease. Overall, the indicators already show a fairly cohesive picture. The green line of the MACD crosses the red from top to bottom, and the D marker is leaving the overbought zone. This already speaks of a potential start of a focused downward movement. The chart can easily drop to the middle line of the Keltner channel. And by the way, another good signal for a decrease from candlestick analysis is the complete absorption of the correction candle, on which we earned earlier. So, right there. Yeah. Let's continue. As I said, people trade in the market, but at the same time, a large fund can enter the market, which doesn't care about your daily trading and buys a large volume of assets, investing for several years ahead. But trading on a long time frame teaches you patience and understanding of the market. Great, almost $3,000 on the balance. Let's look for a new trading opportunity. So let's open a deal for a decrease here. I've turned off the alligator for now, but let's bring it back for clarity. In principle, we already had a very similar situation here. Let's look at the chart. So we see an obvious support level, which coincides with the middle line of the Keltner channel. I expect the price to return to it now. Like in the previous deal, I open at the peak of the correction candle, so I trade with a minute expiration. The indicator signals are also more than clear. There is both a MACD line crossover to the downside and the D marker exiting the overbought zone. And friends, calculating the expiration time is the most difficult part of trading binary options. You can set up indicators, catch clear signals, but there is no precise answer to how to calculate expiration time. It depends a lot on the current market. So I close the deal in profit. For now, it feels like the chart is entering a sideways movement, but let's observe. So it feels like we will soon break the sideways trend downwards, but I don't know when, so I'll set the expiration time to 3 minutes. I think this should be enough. So strong volatility and sharp price fluctuations are starting. Let's observe, maybe I was too hasty with 3 minutes. Yeah, perhaps that's the case. I'll return to a minute expiration and immediately open a deal for a decrease. Let me explain the reason for these fluctuations. So when the price was at this point, at the middle line of the Keltner channel, I expected a breakthrough of the support level and increase the time to 3 minutes. And after the breakthrough, the price was supposed to drop to the lower edge of the channel, in my opinion. But since there was a sharp correction upwards, I opened a deal at the upper edge of the channel, essentially at the peak. And above this point, the price shouldn't rise ideally, and the only possible movement of the chart is down. In such a situation, it makes no sense to wait 3 minutes, so I reduced the expiration time, basically. And here's a vivid example of how the calculation of expiration time can change depending on the current market situation. So the deal is near closing. I suggest increasing the expiration time again. We're back to the starting point, from which I also expect a downward movement. Logic for choosing time was explained earlier. And friends, when trading is done on a fast time frame, you need to react instantly and choose the time based on the goal and current price. So it seems that the market is given another opportunity to earn on the same fluctuation. Again, I'll reduce the time to 1 minute. And once again, I'll open a deal for a decrease. The reasons are the same. We wait for the deal to close, but in the meantime, let's continue our conversation. So expiration time depends on market activity and the asset you're trading. There are many sharp movements now, but there are situations when the chart looks very, very passive. And in such cases, sometimes it seems like the trading hole has frozen, the price can stick to one place for a long time, and naturally calculating expiration in such a market differs significantly. There is no universal strategy, guys. Some recommend choosing the expiration time within the time frame period. For example, if you're trading using a 15-minute chart, then you should select an expiration time within this range. But again, this depends on the strategy and the market. You can't take such advice as absolute. Let's keep observing the chart. Open a deal for a decrease. This time I have set the expiration time to 2 minutes. Look friends, what's happening now? We can notice that the asset's price is moving in a price corridor, essentially in a sideways movement. But we still have the indicator signals, based on which we can assume an exit from the flat downwards. The distance between the MACD lines is increasing and the marker is heading towards the oversold zone. Thus, logically, the price should go below the support level. And we need to determine the next target where the chart should land. Approximately here. Why did I decrease the expiration time? Because in 1 minute, in my opinion, the price will still fluctuate. That is, there is a great risk that the forecast will not pass in time. The alligator lines have not yet completed the crossover, but are beginning to unfold. Observing the chart earlier, you could notice many false movements, so in such a situation, it's better to play it safe and increase the time. And friends, choosing the expiration time is a matter of experience and analyzing the market situation. Start with the simplest. Trade on timeframes of 10 minutes or more. Enter the market when you are sure of your decision. Always define a target where, in your opinion, the movement should end and calculate the time based on the analysis of previous candles. Many of you trade based on indicators. Remember that most of them work clearly on strong trends, and there may be only 1 or 2 such situations per day. And even if you make just a few deals a day, it's better than losing money on expiration, okay? Such work doesn't look like a dynamic picture from a movie, but that's the truth of life. Okay, $6,607. That's the result of today's trading session. Let's wrap up and summarize. Alright, friends, the difference in expiration terms affects not only the profitability of your trading but also the risks taken. Also, don't forget about the discipline. Developing your trading strategy and applying different analysis methods will help you with this. In any case, before deciding on expiration time, it's never superfluous to analyze the chart first. Unfortunately, there is no universal formula. Okay? I hope this video was useful for you. I'd appreciate your likes and comments. Write below what strategy you use when choosing the expiration time. Subscribe to my channel, please, hit the notification bell icon, and we will definitely meet in new reviews that I post on my channel. And for now, this is it. I bid you farewell and bye bye.